Good morning, traders. It is Tuesday, the 2nd of February, 2016. It's 8:02 a.m. Chicago time. Thanks for joining me as always. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. An overview of the global markets just now. Snapshot. Oil is in a bit of a free fall. Down 440 basis points, 4.43%, trading at $30. This is the March contract, the WTI March contract on the NYMEX. Gold is flat so far in the session. U.S. Treasuries, the bonds have rallied 1.07%. Again, the bonds are up 1.07%. That's pretty big for the bonds. The 10 years in the U.S. are up 0.45%. A clear move, flight to safety here. The Asian markets, the Nikkei is down 0.6%. The Hang Seng the Nikkei is down 0.6%. The Hang Seng is down 0.8%. The Shanghai index up 2.27%. The Japanese yen is down 56 basis points. The Eurozone equities, the FTSE's down 1.9%. The CAC 40 is down 2%. The FDAX is down 1.21%. U.S. equities down 1%. U.S. dollar is basically flat. Just slightly down 0.13%, and Eurozone treasuries, namely the Bund, is up 0.33%. Energy getting hit yet again with Europe also selling. The general sentiment this morning coming in is flight to safety is prevailing. And looking at the overnight news, the driving news for the Euro zone is that unemployment has slipped. Unemployment in Eurozone fell for the 15th straight month in December, hitting its lowest level in over 4 years. The data showed the number of people out of work fell by 49%, dropping the unemployment rate to 10.4. This is overall, this is pretty decent news for Europe, but also, at the same time, the BP announced that it had a terrible 2015. Profits for BP plunged 51% versus the prior year to 5.9 billion. The number was even worse for the fourth quarter, crashing 91%. BP 91% to just 196 million, while taking a 2.6 billion dollar write-down for upstream business. BP said despite strong operational performance and growing cost reduction, the lower underlying result was predominantly driven by the impact of steeply lower oil and gas prices on BP's upstream segment, which reported a pre-tax loss for the quarter. The company said it is cutting 7,000 jobs by the end of 2017. BP is a big part of the FTSE. The FTSE is down about 2%. So that's where the market is. In addition to that, just at about 6 o'clock Central, 7 Eastern, the Iranians reported that they're targeting exports of 2.3 barrels per day in the fiscal year beginning March 21st. Iran's crude export loadings for January and February were reported to be around 1.5 barrels per day. This is part of what's driving crude lower. The market's been anticipating this, but I think reality's setting in. Pfizer reported this morning 53 versus 52 beating and 14 billion in revenue versus 13.6. And unless you were under a rock yesterday, Alphabet, Google's parent company, reported earnings of 867. And therefore absolutely destroying the consensus estimate, the Bloomberg consensus estimate of 8.09. Revenues spiked 18.5% to 21.32 billion, topping the 20.7 billion estimate that Google is now bigger than Apple and is the most valuable company in the world. And that's really it. That's what's driving the market since yesterday and overnight. Let's switch gears here and look at what we have for today. Today, 15 minutes after the open, we have ISM New York at 8:45 Central, 9:45 Eastern for January. The previous reading 62, no consensus. At 10 Central, 10 Eastern, 9 Central, IBD tip economic optimism expecting 47.7. And as far as speakers, we don't have much. We have Fed Speaker George at noon today commenting on the U.S. economy at noon Central, 1 Eastern, and after the market, we're looking for a release by Gilead at $2.97. Let's have a look at what we did yesterday versus what we said we would be anticipating in our Trader Bite. So overall, the expectation yesterday was for the market to open in range, which it did. It opened at 19 and a quarter, and the expectation is for it to attempt to go higher and to take out the overnight low, which yesterday it did, to take out the overnight low and head towards 1150, 1911.75. It did do that. It did rotate down. The expectation was if it cannot hold the 1911.75, then it's likely to target the 1908, 1905, and down into the 1903, where it's expected to chop around and just hold the range. Remember that Friday was a trend day and a wide-ranging day. The second hypothesis was for chop and attempt lower. Again, the reason for the attempt lower is because the overnight profile, and you can see it better here. Let's put that on here for a second. The overnight profile was very much geared towards a weak low. So there it is. Very much geared towards a weak low. It's giving us a weak low with the point of control right at the bottom of the range. So we did end up taking out the overnight low yesterday, but we also took out the overnight high, which historically has a probability of about 27% of 1,400 days in the sample. And so yesterday what it ended up doing is it ended up pushing lower, taking out the overnight low, fulfilling the test to 1175. Couldn't quite get to that point. It stopped, I think, 3 ticks ahead at 1250. And then what I had said also is that Hypo 2, if it's not able to push down and hold through 1150, 1175, we still have a weak high on a trend day, an incomplete auction from Friday. As always, you can go back and look at the YouTube video of yesterday for the pre-open recording. Excuse me. Oof. Oh, choking myself here. And what I'd said is the point of control being at the high of the day with a weak high gives us a strong probability of the high being taken out over the next few sessions. And yesterday, I think the market was pretty overzealous here. It ended up doing the overnight stat on the downside, the top and bottom stat, and taking out the weak high by rallying into the close. And with this rally, the key element we needed to keep track of is as long as it's above 1923, it's likely to push into 1935, and it did. It pushed to 1940. Notice the key thing to take away from yesterday. Notice the point of control up here, and look at where it is on the following day. The market is taking the 1930 and making value out of it, making it the most valuable price. 1931, making it the most valuable price. In order for this to occur, you have to understand that there's a ton of trading that has to occur around a very specific area, and that's exactly what happened here. So this is important to note. You'll want to take my advice and put some sort of a shaded line or a box around the 1931 area. It is likely to act as a pretty decent resistance on the first attempt on the way up. It's likely to shut off buying on the first attempt. It's likely to create a pretty decent opportunity on the way up. A very odd shaped profile. We have a double distribution profile yesterday, but there's a ledge here. If you watched the book or if you have S5 Bookmap, you will have seen just a tremendous amount of volume going off at a single price using an iceberg. There's a lot of volume at this one price, and then it just drops off, and then you have the second distribution below. So this 1930 area also acts as a key LVN for the day, and it was the closing price as well. We ended up closing right at in the 1930 1931 area. Very, very odd trading into the close. And then overnight, the market, in sympathy with all of the news that I'd covered earlier, the market has not been able to hold a bid. It has had a very clear channel down overnight and is sustaining it. We have what's called a long liquidation profile here. The market is holding the lower prices. The market has dropped, bounced up to the mid. You could see it testing the mid almost exactly here to the tick, and then continuing its move. This move here is impulsive. The expectation is that a very, very high probability break of 1909 quarter on the open. So the day to template is Friday. We need to be looking at Friday's profile to determine our key areas and the way things are shaping up. The fact that we're opening at this low volume node from Friday, it's likely to reject the upper distribution, basically the work we did yesterday, and it's likely to continue lower down into 1903, and that's not much range. It's only 10 points. So I would say caution longs on the open, but just keep an eye on where it's likely to head. The most immediate move after the open is likely to be a responsive buying up, because we are still in a balance area. We're likely to have responsive buying up to 1915. Don't forget your 1915, a big number here. Responsive up to 1915. I expect it to find resistance, chop around, and start moving lower. That's the primary expectation. The secondary expectation is a push of the overnight low, pushing deep enough to find buyers, and then fighting its way back into yesterday's profile and starting to work its way back up to 1923 and then potentially 1930. That's not the likely scenario, though. Anyway, I'll leave you with that. My time is up. Hopefully you're gaining something from this every day, and understanding that it's all about the auction. The order priority is understand and define your risk, understand and define the auction, understand the context of what the participants are doing, which is what I'm sharing with you here. Hopefully you're picking up the systematic approach that I've been using for the last 11 years out of my 16-year career here as a professional trader. And then understand that once you execute, the mind that you have after you execute is not the same mind that you have once you're doing your analysis and you're calm. If you want more information on that, I've given some webinars on it, and I might cover it again for Futures IO soon. But the book you want to read is The Chimp Paradox. Just go to futurestrader71.com, go to resources, books, and look in there, and you'll find a link to it. A very important book, but understand that who you are with an open trade is not the same person as who you are after the trade is closed or before the trade's initiated. That's why we often look back at trades and tell ourselves, what were you thinking? How could you not see something so obvious? and you can't fault yourself for that. That's why once you execute, you need to just execute and stick to a plan. If you don't have a plan, you're basically gambling. So don't expect too much out of your performance if you're basically randomly gambling. Good luck, and I'll catch you tomorrow.